Hello and welcome to Forex Academy, your #1 website for Forex and crypto education and analysis. In today's edition, we're going to be discussing fundamental analysis for novices, foreign investment in Japanese stocks. If you are serious about trading, you must be responsible for knowing what factors are likely to influence the movements of exchange rates in the Forex market. One of the biggest movers is the release of fundamental economic data, which is usually collated, released, and subject to an embargo by governments or professional economic statistics specialist firms. Luckily for us traders, the majority of this information can be found on economic calendars, which are readily available by most brokers. Keeping up to date with economic calendar events is just as important as placing the trades, because if you are unaware of high-impact data releases which might fall shortly after you place your trade, it could potentially have a negative impact and incur losses. Therefore, get into the habit of looking at your economic calendar every day, and also look out for what high-impact data may be released in the following few days ahead, because most institutional traders will take a long-term approach based on the data which may be released at these future times. The most critical components of economic calendars are the day, the date, the time of the release, the type of event, the likely impact, which is usually measured as low, medium, and high, with the latter potentially causing extreme market volatility. The actual data will be populated on the calendar shortly after the embargoed release. This can be compared with the previous data, whether that is on a weekly, monthly, quarterly, or annual basis, and typically there will be a consensus as to the actual data, which will have been put together by economic forecasters. Here we can see that on Thursday, September the 3rd at 12:50 AM BST, Japan issued an economic data release for the investment in Japan stocks to August 28th, and this was a low-impact event. There was no consensus, but we can actually see the previous statistical based in yen amounts. This data was released by the Japanese Ministry of Finance. The data refers to the difference between investments in Japanese stock markets by foreign entities, and the actual data on the calendar refers to the difference between the inflow and outflow of those investments. Although this is a low-impact event, the balance between the inflow and outflow of funds gives an indication of the strength of the economy, and more importantly, it shows that the overseas firms such as pensions funds, government funds, hedge funds, and investors see value in investing. Traders should be on the lookout for higher capital inflow if they want to buy the yen and lower capital inflow if they want to support trading setups for selling the yen against the counterpart currencies, especially the US dollar. If you enjoyed the video, then please like and subscribe, and leave a comment down below about anything you would like us to discuss in future, or if you have any questions about this particular video. Have a great day.